Today, I'm excited to talk about really an important topic for the second half of this year, and that's all about what are sales leaders thinking about. And I have the perfect person, my great friend, Joe Camerieri, who is now with Lenders One, has a long track record within mortgage banking, and is an icon within our industry. And just go to his LinkedIn profile, and he's a mortgage contrarian. So I love that to begin with. So Joe, I'm excited to talk to you about this topic. So let's kind of jump into it. And a lot of conversations certainly are going on within our industry. I think there's a recognition that change is really upon us, whether we want it or not. And so why don't you share your thoughts on what you see sales leaders thinking about, and really what should they be thinking about? Because sometimes what I'm seeing is they're really off base.
Yeah, so there's a number of things, right?
Yeah.
So let's first talk about like the big elephant in the room is AI,
Oh yeah. Oh yeah.
right?
Yeah.
But it's interesting because if you look at the really large lenders, okay, they all have been articulating their AI strategy. You can't
All
swing
right.
a dead cat on LinkedIn until you're going to hear somebody's AI strategy. But what you really got, I mean, but for the most part, the majority of loan officers don't work for the top five lenders
Yes.
and the top 10
Yes.
lenders,
Right.
right? So you really got to think about if you work for a mid-size or small lender, you know, how am I going to compete in this AI world, right?
Right.
And whether it has a true impact or not remains to be seen. Okay, but so there's a couple different things, right? So there's a few ways to go about it. I mean, one way is you can build it yourself. Well, I will tell you that that's expertise, that's cost.
Sure.
If you're a mid-sized lender, that's a really, really big investment, right? And I've
Hmm.
yet to see a lot of, information about the ROE or the ROI on these
Sure.
investments, right?
Hmm.
So that's one way of approaching it is saying, I see where the needs are in my process, both from a sales and a back office perspective. I'm going to invest in myself. The second thing is you partner with somebody, right?
Hmm.
So I mean, I get a call twice, three times a week with, AI firms focused on the mortgage industry, right? Once
Yeah.
understand what's the point of access and who should I be talking to and all those type of things. And, and I immediately look at the leadership team. If I don't see a mortgage resume, I'm like, oh, that's tough. You got a heavy lift there, right?
Right.
So if you partner with somebody, you just got to make sure you're partnering with somebody who really understands your business, not really understands AI, right?
Yes.
I think that's really kind of the key. Yeah, let me ask a question.
Well, I want to ask about when you talk about middle tier lenders, why don't we define it? Because I think a lot of folks, they're really, what are we talking about as middle tier? Are we talking about a billion to 10 billion in volume, or what is your definition of it?
To me, a middle tier is anything under a billion.
Anything under middle. Okay. And so,
Anything, yeah,
yeah. And anything over are, what is that? A billion and more.
yeah, a, a billion or more a year. Okay, I think you're probably a larger regional.
Right.
And
Yes.
it's different. I could talk all day about the investment strategies and
Hmm.
what I'm seeing lenders do or not do, whether you're an IMB, whether you're a bank, or whether you're a credit union, right?
Hmm.
We tend as an industry to do what we broad brush everything by
Yeah.
volume, okay? But the real nuance, because everything in the mortgage industry is nuance, the real nuance is what type
Yeah.
of lender are you, okay? And what really drives, okay, your origination strategy.
So let's get down to the nitty-gritty about what they're thinking about and what they should be thinking about, because what I see, there's a disconnect. And I think that, as you already mentioned, AI is looked at as some nirvana solution set to a fundamental problem of costs. And when you look at every lender, the cost component is really on the sales side and not,
Yeah.
and that's the reality of it. And so, are you, in other words, experiencing where people are really re-looking at the model, or what is your experience?
Well, again, back to it's all about perspective. So the cost side from a sales
Mhm.
perspective is predominantly driven by compensation. right?
Correct.
And
Right.
and AI is not going to impact that. Now,
Right. Right.
I will argue, there are all the top 5 or 6 POS companies, and I got background in that, okay, are investing in AI to make
Yes.
loan officers more efficient.
Right.
Okay. I don't know if that generates more volume. I don't think that lowers commissions. Okay.
Correct.
But I think if you're a tech company, you got to have AI components, and that's why they're doing it, right? So on the sales side, if I was a lender, I'm not sure that I would. If my POS was investing in AI, that would be wonderful. But that's not exactly where I would be putting my dollars. Okay, my
Hmm.
R&D dollars. I think what I would be trying to do, and we're going to talk about this in a minute, right? Rates are going to drop eventually. What I would do is try to use that technology to streamline my back office. Okay,
Hmm.
how can my processor pipelines be larger? Okay,
Yeah.
without the degradation of service, right? Your traditional mortgage bankers, Pat, when you're talking about the customer experience, which is pretty much driven by sales and perhaps
Yes.
consumer facing technology, right?
Hmm.
For the most part, if if the industry just allows the technology they have today to work and be exposed, okay, we'd all have a great customer experience, right? I think really if you're going to start taking costs, what you really can impact, try to take the cost out the back end, okay? Because I think your origination strategy, if it's people oriented, people focused, okay,
Yes.
it's going to be a long time before those commission strategies and those economics are shrunk, right? Now, I'm a believer that 5 years from now, when I'm talking to my grandkids about the mortgage industry I used to work in, we're going to be living in a consumer direct world, okay? Because my experience has been that your prolific loan officer today is he's probably a little bit younger than me, getting leads from a real estate agent who's a little bit younger than me, and eventually that generation is going to age out, and I think there'll be a dramatic swing when that happens. Okay, but that's not today, and that's not tomorrow, and that's not next year, right? So I think the elephant in the room is where do you spend your money, and I think if I was sat in the seat, I try to reduce my cost per loan on the back office.
And so is that what you're seeing the focus on? So let's get real world and what you're seeing lenders are doing versus what we think they should be doing.
Yeah, here's what I'm saying. I'm saying it is there's two things that are happening right now. I think most lenders are focusing on the back office. Okay.
Correct.
But I do think there's a handful of lenders who are still trying to, whether it be to use it as a recruiting tool, okay,
Mhm.
who believe a more efficient loan officer produces more loans, or putting some money into that, right? Now, all that being said, as I told you earlier, I get a phone call every twice a day from an AI company. You should be it's unbelievable to me that there's so much focus in the world of these AI tech companies of building a AI loan officer. Okay,
Well,
somebody who can originate a loan. And I'll tell you, I think that, and they're doing it for the right reason. Just like you said a few minutes ago, Pat. They're saying, what is the biggest cost component in loan
yes,
manufacturing? They're saying it's originator. I'm going to attack the originator. Okay, but that AI agent can't source business, right?
correct.
And then when I look at just the demographics, just the other day there was a LinkedIn post which I thought was fascinating. The average age of a person who purchased a home last year was in their 50s, right?
Yeah.
Average home buyer now is moving to almost just over 40 years old because you gotta
Yes.
have a lot more money and be more seasoned in your career to be
Right.
able to afford it, right? I don't see 40 to 58-year-old people talking to a robot to originate their loan. I don't, maybe one day, but I don't see that right now. And I don't see, um, perhaps there'll be some really innovative IMBs, okay, that try to move that forward, but I don't see a depository, okay, taking the compliance risk of having loan originations and counseling and rate negotiations being done by anybody other than a human being.
So let's talk about, I mean, what's going on in the real estate agent world does foretell what will happen to our world of the
Mhm.
mortgage lending side. And so is there an understanding? I don't know that I see it from lenders of recognizing the drastic changes that are going on in the real estate agent world, which is a similar model as our model. It's decentralized. You kind of have independent contractors, even if they're W-2 people, they're still independent contractors. And so what is your thoughts? Is the real rapid change going to happen there first, and then mortgage lenders are going to come to grips with that the real estate agent might become a loan officer in the origination side? In other words, what is your thought about this component of change? Because the industry's talked about the aging out, but that's been going on for years. And I
Yeah.
don't know that people, they still want them because of not getting enough money from Social Security and all this other stuff. They're still working. These loan officers never, they're still working.
They are. But you've been to an MBA conference, right?
Yeah,
An
so
MBA conference, and the last one I went to was striking, right?
yeah,
There's 50% have gray hair, 50% are in their 30s, right? Like,
yeah,
and there's like kind of no in between. But to your point, so let's go back 10, 12 years ago, right?
yes.
What, this whole concept of creating ecosystems, okay,
Mhm.
which is now you hear it, now you're seeing it play out in corporate America. But 12 years ago, every single agent, a prolific agent, had their own ecosystem. They were
Yes,
running the same play. They had their title guy, they had a mortgage guy, they had an
correct.
insurance guy, right? They had a moving guy. So the agent was the center of the universe, okay, had their network, and consumers relied. I mean, and the stats were, proved that the consumers really relied on that agent to help them get set up with providers to help this homeowner event happen, right? So now what you're saying is it's the agent is being now starting to be replaced by these corporate ecosystem, right?
Correct.
Rocket, Redfin, the Compass, anywhere, and all the entities that go along with that. Now you got the Remax and the Real, right? And even Place. Okay, these are all corporate ecosystems, and so now I don't want to say the agents displaced, but there's a tremendous amount of pressure right now on both the agents or wherever the point of entry is. Typically, it's an agent to
Correct.
support the ecosystem, right?
Mhm.
The corporate ecosystem, not their ecosystem, right? So,
Correct.
so that's the first thing that's happened, which I think dynamically it's going from, hey, I'm an agent and I own this, this section of town and my
Yes.
ecosystem, to now there's a multi-billion-dollar company who's, that I work for, whether it be independent or not, right? I work for who has their own ecosystem with expectations of what I support. The second thing is, which I think is fascinating, and I had a conversation yesterday with a smaller real estate firm, but they're building out their plan, and they have a mortgage company, they have a title company, they have an insurance company, and they have real estate agents. I was shocked by 50% of the business that they do are driven from corporate to the agents, not the agents to the
Hmm.
to the ecosystem, right? So
Okay.
the other thing that I think, and you can't deny the fact that that's likely going to be the plan with Rocket and Redfin, right? I
Sure.
mean,
Yes.
um, it's really like who's really going to be responsible in the future of owning the process to source customers, and how long, and when that tips the scale, will that also tip the scale on the commission splits, and and
Correct.
and what the grassroots people like loan officers and like real estate agents are getting paid for transactions. So
Yeah, I mean, it's a great point that you're making. Well, you also see a lot of leaders talking about maybe not even recognizing the ChatGPT loan officer. In other words, the point of entry is going to be different than what it has been in the past. And how can lenders address that? Because the customers, I mean, I do it myself. When I want to look for a vendor, I go to ChatGPT,
Yeah,
okay, tell me the top three. And then it's like whittling it out. And so talk about that. I don't hear a lot of lenders understanding that. They're looking for something magical that it's this, AI version of a loan officer, not recognizing that the point of entry will be much different pretty quickly.
it is much different, and depending on the real estate, depending on the interest rate environment, there's
Mhm.
some fascinating things that are going to happen, right? So
Right.
obviously the industry's never been smaller, probably since you and I've joined the industry as it relates to
Yeah,
contraction, right?
sure.
I think I heard a number the other day that, at its height we were close to 500,000 people working in the mortgage industry, and right
Yeah.
now we're below like 225,000,
Yeah.
which you think about the impact of our industry to global economies, and it's
Yeah.
only 225,000 people, right? I think there's a couple of different things that are going to happen, right? I'm seeing, and only because I've been tasked to help them, okay, these very, very large consumer finance platforms, okay, getting into the mortgage business, right? They're
Sure.
either selling leads, they're all in the HELOC business and second lien business, okay?
Yeah.
You can look on MLS, are all getting their mortgage broker's license on a national basis, right? So to the extent that you say, well, how are we going to source business in the future? These are huge, huge firms with millions of customers and relationships that they've developed with these customers, okay? And traditional lenders are going to have to compete with them when interest rates fall, and now the customer is in charge where they want to go get their loan, not necessarily a real estate agent or a financial advisor,
Yes.
things like that. So, it's really, really interesting. And I do think, Pat, and you've been working on this, there's an opportunity that needs to start right now where if I'm a traditional lender and I've done a consumer loan, how do I stay an important part of that customer's life? Okay, as that business, as the
Yeah.
time moves
Lifestyle.
on.
Mhm.
Okay, in order to retain that relationship when it's time to refinance or to buy the second home,
Right.
because if you're not doing that,
Right.
everybody is going to get bombarded by the credit karmas of the world and nerd wallets and bank rates.
Yeah.
Everyone's going to be in the business. Everyone's going to be an outlet for mortgages and refinancing.
So one thing that you were saying, and I think this is obviously the big question, is the refinance world, and it's always been the savior to the mortgage space. Is that, but if you actually look at the dynamics, the debt, and I'm just putting on my old capital market side, to me, we're not going to see that for a long time. And so, and if we do see it, it will be marginal, marginal amounts. And going back to our traditional business, which was always a third of the business with debt consolidation or some version of refinancing and so forth. So we are left with, the purchase money, and that's something difficult for depositories, for even IMBs to reach into an ever-changing, space of how loans are originated. So what are your thoughts on that?
Well, so a couple of different things. And again, the business is so nuanced.
Yes.
It should be so much easier for a depository to keep to
Yeah,
be active and growing in this market. They have a defined customer base. They they have data. They have access to data. They have access to customer
I agree.
activity. Okay, it should be so much easier for them. Okay,
Mhm.
just like it should be easier for a large IMB who has a portfolio of MSR. Okay.
Correct.
And I would say that the IMBs are getting there. Okay. There's a lot of interesting investments that are taking place in the marketplace to help identify customers who may be moving, second homes and HELOCs. And so the large IMBs in certain portfolios are getting there. But again, right back to the very first thing that we said, top 10. right?
Yeah.
You start getting below that, they're not investing money in that. They're just waiting for refis. They think retention is about refis, right?
Yes.
But
Correct.
the depositories, boy, there's a loss opportunity there. Okay. And it's not
No
about their
question.
MSR portfolio, it's about their customer base.
Yes, I agree. We'll have to do
Yeah.
another webinar on that, or another podcast on that. I agree, but I rarely see recognition of that.
I
And
mean, I don't think the stats change much the last decade, but anywhere like if you're a depository, credit union, bank, right, and you look at your head of household primary checking accounts, you just look at that number, right, because that's an indication that someone has more than one or two. That's your bank, right? You look at them anywhere between 8 and 13% of that number is going to get a first mortgage every year. So
yeah,
if you just sit back and say, all right, what am I capturing out of that?
yes.
I will challenge you that if you're not a top four bank, I'll challenge you, you never get over 5% of that. And
Mhm.
that just to me is it's just such an opportunity.
Yeah, well, hey, listen, I've seen banks that don't even have CRMs. I mean, in 2026, I mean, it's almost incredible. I mean, you have to recognize that if you want to have revenue over time, you have to be in contact and know who they are. I mean, it's somewhat
Yeah.
basic. Yeah,
It's
it is incredible for sure. So, Joe, as we're getting towards the end, talk about kind of three things for the rest of this year that when it comes to change, that if you were a lender or a sales executive, that you should make as a priority.
So yeah. So one of the things is, which we just mentioned a few minutes ago, the industry shrunk, right?
Right.
So everyone's cut from a headcount perspective as much as they possibly could, right?
Correct.
And presumably you have the A team, right? Everybody's kept their best employees. You do what you can to keep your best employees. Everyone's working with their A team right now, right?
Right.
If I was king for the day at most lenders, I would say, okay, what happens, even if it's a week, what happens if we get a 25 or 30 basis point rally? Okay. Do I just crush my team? Right. So you never know what's going to happen with interest rates. I mean, particularly in this political environment. So
Mhm.
I would start thinking about what is my plan? What is my plan when that happens? I'm I'm flabbergasted after 40 years in this industry that the leaders of the mortgage industry are surprised when rates go up and they're surprised when rates go down.
Yeah. True.
and
True.
and it's inevitable that both of those things are going to happen, right? So what does that mean? Be prepared, right? I'd make sure that I have capacity with my third parties. Do I have redundancies, right? Because when the industry gets crushed, they get crushed too, right? Do I have a contract with an outsource provider, okay, who I can lean on when that time comes, right? Because the last thing I think this industry needs to do again, okay, is rates drop or rally a little bit. They hire, hire, hire. It goes
Right.
back up. They fire, fire, fire. You can
Correct.
avoid that by having a strategic partner. Send them a channel. Send them 5% of your business. Have a trained team with a third party that you're under contract. You're one call away. Now that organization who has a propensity to hire faster, quicker, better, goes out and builds your capacity while your A team stays in their seats and you're managing the flexibility in the bottom.
Mhm.
That would be one thing that I would think about.
Okay. So name a couple other ones.
Okay, I would invest in. I would really look hard at some of the AI capabilities out there. Okay, and I don't know that there's two things, right? There's really two kinds of players out there. Okay, in the back office, ones where we'll build AI agents for you, and they'll do these tasks, right? Well, that's all really cool, but to have real economic impact, you probably got to build 300 or 400 of them, right? I would look for technology providers out there that have an overlay, okay, where they're overlaying on your LOS. You're kind of demoting the LOS to a database, and it's really technology driving workflow. I think for the most part, especially under that billion, that's where I'd kind of be focusing my efforts on from an AI
Mhm.
perspective.
Mhm.
And then I guess the last thing I would do is I really keep an eye on my origination strategy. Okay. It is my origination strategy, is my sales strategy, okay? Is it sustainable? Okay. Is it
Yeah.
resilient for rates going up further? Okay, or rates dropping, and really kind of focus on that. It's interesting. If you look at all the publicly traded mortgage companies, Rocket always trades higher than everybody else. An analyst, I was having lunch with him one day, and he said, "You know why?" And I'm like, "Well, it's probably product diversification, right? They're not just." He said, "Yeah, but
Yeah.
it's still 90% mortgage." He said, "It's not that." He said,
Yeah.
"What it is they have an institutional way of generating mortgage volume, and that institutional way is they spend $10 billion on a brand, right?" Now he
Yeah.
says, I'm not recommending that that's what every lender needs to do. He said, but the premium is because they have an institutional way of getting a customer acquisition, not reliant on human beings.
Correct.
So I
Yeah.
think the third thing I would focus on is, do I have a resilient sales strategy? Okay, and how can I make that more efficient? And how can I make that in a way where it doesn't really matter what environment that
Mhm. And can I add a fourth?
we're in?
And
Sure.
I see this every day from a sales training. I mean, as executives, you need to recognize that 80% of your customers do not go back to your originator. And we know that from Black Knight and all these people. It's actually worse than that. And that's pretty bad unto itself. I mean, so there's low-hanging fruit that's there, and we
Yeah.
need to address it, but it's at the point of, basically at the origination level. So
Yeah.
we have to talk more about this, Joe, because you're right on with all that you're talking about for sure. So, Joe, how can people get a hold of you to have further discussions about this topic? Because I know you want to talk about it because we talk about it all the time. Yeah. So,
Well, I'll be starting a new position very shortly. I'll get that out on LinkedIn. Certainly come to my LinkedIn site. I'd love to be able to talk to you about that. I have a lot of opinions,
yeah,
okay? Uh,
yeah,
and but it's also based on a lot of experience. So yeah, it's this is all fascinating stuff, and I'd love to chat with anybody in the industry about strategies and things like that. I spend in all the roles that I've had, Pat, in the last 40 years or so, a lot of them, most of them have been consultative, right?
yeah.
So it's what I do, it's what I'd like, and I'd love to hear from everybody.
Well, I highly recommend everybody to reach out to Joe, and I certainly want to thank you for joining us today on the podcast and for our listeners to get a new podcast interview, go to patsherlock.com. Thanks again, Joe.
Thank you.
Thanks for joining us today. And if you're looking to become a more effective sales leader, check out the Mortgage Manager Mastery and the new companion workbook at mortgagemanagermastery.com. Until next time, keep learning and keep growing.